Welcome back to Small Caps, and it is Truth Bomb Tony time. And as you all know, every couple of weeks, I have a bit of a discussion, sometimes a Barney, sometimes we have a lot of fun, but most of the time, you guys get lots of value because Tony is a really busy guy. And I want all of you out there he hasn't been on for a couple of weeks because you've had some. Tony, a shout out from all the small cap people out there that watch and listen to what you do. Your dad's just recently passed away. And I know that from all of our community to you, we send you all of our best. And it's been a tough time. And that's why, ladies and gentlemen, Tony wasn't on last week when he should have been on because he was coping with, and, it's tough. It's tough when you lose a parent.
Yeah, I guess. Our dad passed away, sadly, on Thursday after a short illness with cancer, what they believe. It was too risky to do a biopsy. And the really sad part for me is that he was mum's carer. And mum suffers from Alzheimer's dementia. And after my dad died, the following day, I had to take my mum to a dementia ward. So in a way, it's like losing your mum and dad days apart.
Yeah.
So, it's been tough, but what I've found is that it's best simply to get on with the job of doing what I do. I love what I do. And, money doesn't sleep, but I've had some time to, reassess things. And the reassessment was I love what I do and I love our educated Stoushers, Kerry. So bring it on.
And we love you, Tony, and we send you all the best. So thank you so much for joining me today because it's been a tough time. But you know what? Truth Bomb Tony, I think you got a few truth bombs. It's the new financial year. Oh, my goodness. Last year was interesting. This year is getting even more interesting. And what I'm finding is there's a lot of nervousness out there, but it kind of goes from I'm really nervous about the stock market to I'm euphoric again. So it's all over the shop. But governments keep printing the funny money and stock markets keep going up. And we're talk about history, we're in the roaring 20s.
I use the term batshit crazy and, with good friggin' reason. You've got to look at markets, the stock market. Look, a lot of the small cap stocks have had bigger breakdowns than a Big Brother eviction ceremony. And the last couple of months have actually been tough in the small caps, whilst you've got the major indices that are creating new records. But on the whole, with what we're seeing with coronavirus, the risk of earnings declining, I'm still saying that things are going to get very ugly. And, you look at the euphoria around Dogecoin. There's the community says...
But that's different. I mean, come on. There's euphoria around Dogecoin and there's euphoria around BHP. It's a little bit different, and even small caps, because they're real.
Well, let me get to my point, right? The point is you can push an asset up in price, but how the hell do you get out? It's a bit like a Ponzi scheme. It's a bit like Bernie Madoff guaranteed 11% per annum, which everyone fell for.
Yeah.
So my view is you can get euphoric about buying a stock at the top or buying a knockdown in a suburb 50 Ks from the city or the beach. But if you get into financial strife, you're going to have to sell that property or sell that stock. And, you find in the spec market that I think next year's tax loss selling is going to be brutal because a lot of these stocks that were former shells that became bandwagon jumpers are going to go back to being shells. This is all going to end, and it's going to end probably quicker than what people realise. You might see the Dow off 700 points, then it bounces back 300. It's coming. But
what's going to be the driver for that? Because Tony, I'll be brutal to you now. You've been saying this for a while now that it's going to come. And, if people had said, oh, okay, we're about to hit the wall, and people had taken all their investments out and stuck it in cash, they'd be a lot worse off now.
Well, if you sold at the bottom of COVID, oh, absolutely. But that was again, it's proven to be a buying opportunity where we stepped in to buy a lot of my companies at 1/3 of where they are now, sometimes 1/5 to 1/10. So we had that nasty correction. Markets have probably overshot a little bit more than what I expected, but you try and get out of an illiquid asset when there's a rush on it. So be very careful. Stupid money or the FOMO money can go on a lot longer, and it's what the COVID has inspired, another year and change of absolute stupidity. And, you know, it's best, okay, you might see another few months, it might happen early next year, but markets do correct, and 15 to 20% corrections are healthy, and it's part of the norm. And the four most expensive words in history are, this time is different. I don't care what the trend is. You know, any asset can have its rug pulled from under it. You might have like the Canadian coal companies had some legislation and regulatory go against them.
Yeah.
You've had crypto cops it all the time with regulatory stances, banks, countries. So, you know, you only need an exhaustion of buyers in a market to see it correct. And once things start to fall, people start taking their losses and fear takes over. And even, you know, one of my favorite stocks, Exafarm, got to $1, and not long, a few days ago, it's under 50 cents.
Yeah.
So it happens to the best of companies. And what I implore people to do is get educated, because a lot of new investors don't understand fear, greed, and stupidity. They don't understand that once the trend goes against you, you can't drive a car without reverse forever. And what I'm seeing now across the board in the junior small cap market is stocks reverting back to fundamentals, and a lot of those companies wouldn't know one if they tripped over it. So, you know, I've seen the corrections in my stocks. Some of mine have broken down. We've gone in, we've bought them up, but there's a lot of shitty stocks on the market. I'm not going to mention them because I'll get sued, but that's my professional privilege, Kerry.
Absolutely right. You mentioned Exofarm a moment ago, got up to $1, reverting back to about 50 cents. Is that on anything other than, you know, when a stock starts to fall, everyone piles out of it, or was there an issue with that? Had it sort of zipped past its true value?
I think it ran too hard. And I was quite open with people on this channel that I put some stock up for sale at $1.
Right.
For me, you know, I had the right to. I floated it at 20. It fell to 14. That's enough space for people to make up their own mind. I've got to take some profit, but I think it overshot. Then they raised money at 72 cents. Those that took that placement some of them were probably expecting a flip, and then the selling begets further selling. And a lot of these biotech stocks that look thin on the screen are going to halve at some stage. And you've got to look at the likes of proteomics, for example, or the other stock that I was involved in, the IPO, Narada, fell to 11 cents during COVID. You know, Northern Star, over its move 11-year run, has had some pretty nasty corrections along the way. And what I suggest to people is I did a special education session during the week on Spotty, and I was saying to people, look, some of your best stocks are going to halve. Don't be embarrassed about it. Because price weakness is your friend, and that's what we've had in spades over the last week. And some of the selling's brutal. But what I reiterate to clients is that we have more knowledge, and you've just got people selling for a variety of reasons. And it's like an ecosystem at the bottom of the sea. We've got chartists, we've got fundamentalists, we've got corporate guys. We all feed off each other, and that creates a perfect community to make a lot of money or lose a lot of money. So it's just the normal cycle of small cap stocks.
Yeah, but if the company has got a good, like, you know, the Warren Buffett way, buy good companies that are undervalued. I mean, you know, a Coca-Cola or a BHP, they're good, strong companies, and you know, an Exafarm got a good product. Wouldn't you just sort of sit and ride the wave out, or are you saying you've got to keep watching all the way along and take profits as you go? So I guess what I'm asking you is, should people, if they believe in the company, should they buy the stock and just sit there, or you say you got to watch it and get out if you see it start to flip?
The ostrich approach in small cap stocks doesn't work.
Okay.
Now, what my suggestion is to buy at the right price, watch it trade. Sometimes it will overshoot. If you can take a profit and look for another 5 to 10 bagger, what I do is, in that book, 100 baggers, is the coffee can approach, where on each day over a certain number of years, you pull out the piece of paper and sell the stock on that day. And that can give a stock 3 to 5 years to play out. Because people think, oh, shit, I've got to wait 3 years. But for a 30-year-old watching this program, you're still young at 50. I mean, I'm almost 50 and I still feel like I'm 18.
I'm not even going to say what age I am. No, I will actually. I'm 60 and I still feel young. So there we go.
So people think that, this biotech's not going to be in the clinic for a year, or do I have to wait 3 years? People in the likes of Ramilius at one point, Northern Star, had to wait years, but to make 300 times your money. I mean, you could probably only get that in an Argentinian bank. I mean, that's what you got to look at. And what I suggest to people is, you cannot buy a stock, have it go 5 to 10 times, become overpriced, and stick your head in the sand. Because my best tip is to buy an uneven number. Instead of 100,000, buy 111,000 something, and that gives you your first profit-taking point. But
what do you mean? What do you mean? What do you mean by that?
It's like going to the shops and trying to buy a pack of chewy with $100. People they like to hold on to 100,000 shares. They don't want to split it. What I've found a tactic with my clients is just buy an uneven number. And when I ring up and say, look, this thing's flying, let's take some profits, we can round it down to an even number, or we could halve it to create another uneven number. It's all about psychology, because most of the time our research is right. It just might be the right stock, wrong person. So I've got to learn all these tricks in psychology to help my clients, because sometimes extracting someone out of a 10 bagger is near impossible. And I've actually come up with a theory that the highest level of stress between an advisor, which I am, and a client is when they're up 10 times their money, or when they're down 10% of what they paid for it. They're the most stressful times. But when something is flying and looks as though it's going to overshoot to the upside, you need to reduce your anxiety, and that's through taking some profits.
Okay. Yeah, that is very good advice, because there's a lot of people out there at the moment, Tony, who actually don't know what they're doing. There's a lot of apps out there at the moment where, you can go and put your hard-earned money, funny money, into a stock that you know nothing about, and you don't even know what you're doing or how to get out of it. And I think that that's where sometimes having an advisor like yourself, and look, I'm not promoting Tony at all. This is a chat. This is not us saying that you should go and chat to Tony, but sometimes for people that either don't have enough time or don't understand what they're doing, not just necessarily to go with you, but to go with somebody that can, I guess, guide them along the way.
Absolutely correct. I'm not here just to grab clients and grab brokerage, because, how much is enough? The classic from Wall Street is, how many yachts can you water ski behind? I don't want to have my service fall for the sake of having 10 new clients when, I've got these clients that have been with me a long time, that have done well, that now need my attention when the market gets tough. So, I'm happy to...
So sorry to interrupt you, but why do you say when the market gets tough? Because I'm looking at the market. I mean, BHP are going to come out with their results any moment now. They look like it's spectacular. I mean, it's a bit, I know it's not a small cap, but they're looking at, a $3 a share dividend. Very nice for those that are holding BHP at the moment. I'm looking at that going, well, we're not in tough times. We're money printing out of control, commodity prices going up. Companies like BHP and even some of the small caps are going to do very well out of this crazy time we're living in. Why do you say it's tough?
Because a number of high quality small cap stocks are dropping in price, and have so for the last couple of weeks.
But don't you think that that's tax loss selling? Isn't that just it's the time of year people are just going, oh, well, I'm done. I'll take that as a tax loss and that'll offset some of my gains.
I think it all stems back to the psychology of someone that sees a falling price, then loses faith in the company. Then they don't have the balls to go in and buy when they should. Humans are wired to buy high and sell low.
Yeah, that's right.
So what I do, I only care about quality spec companies. I mean, that's probably an oxymoron. But for me, the last few weeks have been tough because my stocks have run into a lot of selling. You've got people out there that they can't read the market. In a thinly traded stock, they might put 300,000-400,000 shares up for sale, and that causes sellers to come in. For me, I've learnt the psychology of the spec end. It's a model not many people could replicate because I've got probably one of the highest number of databases of getting into people's heads and knowing how they think. So for me, the small end is challenging, but it's a case of our last 10 bagger was Eagle Mountain.
Oh yeah, great little stock. Yeah. But that's still a good stock, isn't it? Got a big copper play.
Yeah. But when you pay 13 cents and it goes to $1.30, you have to take something out there. It's still in the low 90s, but that was in less than a year.
Yeah.
And some of my clients said, well, let's wait for the new tax year. And it's cost them 40 cents to try and, that's the other thing. I'm not a tax advisor, but I've seen in previous cases, people hang out for that 12 months and sometimes that bargain, it dissipates. And I've seen takeovers where people are held on for 12 months and the same result. So I just think you've just got to not overthink it, buy the right quality company, get to know it, get to look at the risk reward. And when the stock's getting belted, if you've got the cash, top up, because a lot of these trading books will say never average down. Well, all my most successful clients average down.
Wow. Okay.
But if you apply Buffettology to a bandwagon jumper where the directors are only in it for the trophy wife and the trophy car, and they then become a shell, you're going to repeatedly lose 80% of your money. And that's a bit like my former marriages.
Oh, no. You do make me laugh, Tony.
You got to laugh. Life is short, Kerry. Life is short.
Mate, I agree. I often say to people, we're here for a breath, and so make the most of it and, make each day really count. Averaging down, though, is really interesting because most people can't do that. And you say the psychology. The psychology of investing is, as you say, people start to panic. They see a stock going down and instead of piling in, they pile out. You're never going to change that, though, are you, Tony? Because that's just people's psychology. Most people will not be able to turn around their brain power to go, you know what, this is the time to buy.
Well, stupidity. There's this formula I've come up with. Stupidity equals opportunity.
Oh, I like that.
Well, I've just come up with it. Not the last way. I thought, let's just, but I guess everyone is suspicious of the stock market. People are suspicious of companies. A stock drops from 20 cents to 15 on low volume. Suddenly, the resources in the ground are worth jack shit. What happens with that is if all of your stocks are coming off a bit, there's nothing wrong with the companies. I often use the campfire slide where we've got people around a campfire playing guitar and holding hands. And in the next scene, they're throwing stuff into the fire. The company's the constant. It's the mood of the shareholders around it that dictates it. And these stocks rise on FOMO. They rise. People just want to jump on the next thing going up. Yeah. And then when it reverses, they want to get the hell out.
That's called laziness, Tony. That's called laziness. They're not doing their homework.
No, people don't. They just want to get the next hot tip. I've been studying markets since about 1993 and have been advising since 1998. And I've found that I've got my stock selection model sorted. I know exactly what to look for, but I am a psychologist. I need to teach my clients that, hey, wait a sec, this is how you're going to make the multiples. This is why you're there. Adopt the coffee can approach. Stock available for sales, too easily accessible. Get something converted to SRN and stuff it away for the next year. By that, I mean, you've got it on HIN, you can convert that to SRN where it's not going to show up on your screen every day.
Okay,
And
so for those people that don't understand, just explain the difference between a HIN and an SRN, because there will be people listening that don't.
Okay, well, HIN is your sponsorship details with a firm. So that HIN is transferable. So that's what you hold. So it's all CHESS sponsored, which is probably the safest trading platform in the world, the ASX. So SRN is where it'll convert to an SRN number, and then you have to enter that number to have a registry search. So it's not sponsored by a broker, but that doesn't show up on your portfolio list, and it makes it harder to sell. Because one of my most successful clients doesn't open his mail, and we went to his facility, opened up his mail, and suddenly there's 100 grand worth of stock he didn't know about. So complacency kills you, or it can make you. But the best way is if you buy a stock with a 3 to 5 year time frame, don't panic if it's not doing anything in a few months, because as I keep saying to my clients, good news will get banked. Don't worry if people don't buy it the day after the announcement. Good news is it's like a build-up of good news, and suddenly it's going to attract a bigger company. So this is a very complex game. It's taken me a lot of experience in dealing with people, dealing with companies, reading body language, which is important, because that's why conferences are such a good place to go, because most communication is done through body language. So
that's so true.
You know, it's when I go to one of your conferences and I'm talking and I say, look, you people up the back, you're only going to absorb 28% of what I say. So what the hell are you doing sitting up the back? I mean, this is a mind, it's mind games. It's psychological warfare. So what I can do for people is put together a portfolio, and then let's have some fun. And that's going to involve people complaining that they're not making any money, but it does your head in, to be honest, sometimes.
You got to get the right clients, Tony. All right, we're almost out of time, so I want to do a couple of stocks. Let's cover a couple of the stocks that you are looking at the moment.
Okay. Well, Narada had a bit of a pop today. Their cholesterol inhibitor mixed with Lipitor reduced overall cholesterol 65% in a rodent model. So that looks quite good. They're looking at the traumatic brain injury side as well. The issue that viewers might have is the second tranche of a 26-cent CDI placement just came out. So it's going to ebb and flow. People still can take a profit from that placement. So that's one I've been looking at.
ASX code of the ASX code for Narada is?
Do you want Wheel of Fortune language or phonetics? Let's go Wheel of Fortune. I'll have an N for Nelly, Y for Yvette, R for Roger. There we go.
Let's go Wheel of Fortune with all of them. That's kind of fun.
Okay, all right. Wheel of Fortune.
Wheel of Fortune. Next Wheel of Fortune one.
I've actually liked what Mako Gold is doing. Mike. Well, no, I said an M for Mike, a K for keratone, and a G for goat. That'll do. That's a bit odd.
Yeah, that was odd.
So they've moved. They're going to move to 90% of the NAPI project where they were in joint venture. The results they've been putting out have been very good. They're in the mid-8s now. It reminds me a little bit of West African Resources, which went 5 to 6 cents forever, and I think that's broke. I think that's almost $1 now. Look, It's going to take time, but if you've got a quality gold junior that can drill out 1 million ounces plus, you're going to look at a market cap upwards of 50 million plus. So as long as the gold is the gold that can be mined. So I've been looking at MKG. Alta Zinc, we're buying below 7 cents. I'll have an A for Apple, Z for Zulu, I for Indigo. That's popped up to about 8, but that stock's still cheap. Italian zinc-led focus, great management with Geraint Harris running it. He was at the helm of Adriatic Resources. He jumped off. He moved to Alta Zinc. They've got copper and cobalt. We've been topping up. And
but that's all in their projects in Italy, isn't it? I mean, I don't look at Italy as a jurisdiction for mining.
Very rich mining history, and a lot of the zinc smelters are in that area of Europe. They're very close. So it's more amenable to being treated. It's in a great area of northern Italy. So yeah, people don't realise that you can have mines in Europe. People think that, you sit outside with a red wine and Prego everything. I don't know. Sometimes you've got industries in Poland. Adriatic is I think in Bosnia, Serbia, or Herzegovina, or one of those tennis plays you see at Wimbledon. But I mean, that's what you're getting. These things can hold great and they can do very well. So, Australia's a great jurisdiction, don't get me wrong, but as you've seen with some of the Canadian coals. So that's another one we're looking at. What else?
Give me one more and then we're going to have to wrap up for the day.
Yeah, one of my long-term gold favourites, Oryamin, dropped to about 16.5, 17 cents.
Yeah, what happened there? Because they've got a great management team. They've got good ground. And Brad, he's a good operator. He's smart. What's going on there?
Well, they drilled Mount Palmer and came up with the most. Oh, they were very disappointing. Actually, they were terrible. They were bad drill results. But the stock held on okay. But then as a stock gets towards its IPO price, people don't want to take a loss. The selling was exacerbated. Some idiot put a crap load of stock on and that forced further selling. And I sat back and said, thank you very much. So I picked off some at about 17, I think, 17, 18, because, I look at what Bill Beamer did at Northern Star. It took time, but it's often the growth in a junior company that you don't see. Once you get one operation going or one discovery, then the growth becomes exponential.
And it's got a good management team. Like, these guys are no fools. They've been there, done that before. They're not idiots.
Well, it was like Charlie Bass at Eagle Mountain. Eagle Mountain was the hot stock, and then suddenly it's 8.6 cents. Or Chris Cant at Staveley at 9.6 cents. Don't forget good management, because good management attracts good projects. And even though these stocks are getting belted into the next postcode, oh my God, that was a buying opportunity. So I actually went out and bought quite a lot of shares in a few of my favourites, and I'm happy to sit tight now.
Well, Psychologist Tony, that's what we're going to call you next time. We're not going to call you Truth Bomb Tony. We're going to call you Psychologist Tony next time we see you. But listen, thank you so much for joining me on Small Caps today. It's been a tough time for you. As I said at the start, lots of love going your way, I'm sure, from our whole community out here. Really appreciate you joining me today on Small Caps, Tony. Any one final thought for people out there?
Life is short. Take a risk. Don't procrastinate. Just do it. That's my advice. Just do it, because the worst you can always claim a loss as a tax deduction. Just take a punt. Get involved in the market. Don't be scared, because there's a lot of scarier assets that you can do your dough on. And just make sure you marry the right partner is the other way. That's the other way to lose 80%.
Tony Locantro from Alto Capital, thanks for joining me on Small Caps today.
Pleasure. I'll see you in a fortnight.
I'll see you in a fortnight. Thanks, mate.